Profit this morning. Well, another one that reported earnings and was a spectacular set of earnings was Brigade Enterprise. Let's pull up the stock and see what it's doing. Up and about 2% gain on Brigade is what we are picking up on. Pavitra Shankar, MD of Brigade Group, joins in. Hi, Pavitra. Thanks for joining us. Another significantly good quarter. I mean, quarter on quarter, there's no stopping you guys. Break those numbers down for us. Geographies, verticals, I believe residential is the big push this time.
Hi, good morning. Thank you. Yes, we're really happy with the results this quarter and also with the outlook. All businesses have done extremely well. Residential has, I think, continued on its momentum of great customer demand, good sales. We've been able to increase pricing as well with customers. So this is across our markets in Bangalore, Chennai, Hyderabad and Mysore. So we're very positive about the trend for the real estate sector. In the office space, we have actually done some good progress with leasing, and despite having the SEZ space, we've been able to see good traction on that. So we should expect to see a very minimal sort of vacancy and lease up required in the future. Retail also fantastic footfalls across all our malls. The business is looking strong. We've been able to lease up or do new leases with better rentals from potential tenants. And hospitality is actually doing exceedingly well, more than a 20% increase year over year. The hotel business was obviously down for a long time post-COVID, but I think we've been able to continually see improvements in occupancy and ARRs. We have hotels, 8 hotels across the country, predominantly in South India and GIFT City, and all of them are performing well. And across the board, I think our outlook is that the momentum should continue to stay. We're looking forward to sustained demand on all fronts, and hoping to see some project launches in Chennai and Hyderabad in the next 4 quarters, in addition to Bangalore, of course.
Summed it up really well, but I'm going to take this one at a time now. Let's talk about leasing. You did say that you were seeing a significant growth in leasing. Footfalls have also improved. Hospitality, we'll talk separately. Similar sort of growth expected in the next couple of quarters as well, or in calendar year 24, or are you expecting this to only get better as we go along?
So the lease up we've done is basically a reflection of the amount of space we had available to lease. Our operating portfolio is around 8.5 million square feet. So there's barely any vacancy, maybe a 0.4 million square feet left to be leased up. We will start pre-leasing for some of our projects that are under construction. So once that inventory is added to our pipeline, then we should see the leasing increase. That said, these are all non-SEZ spaces, and in the past, we have taken some time to lease up the SEZ space since we didn't have the denotification clarity from the government, although that has come, but the working out of the exact details still needs to be done. That said, we don't have any pendency on that. So all of the fresh space that we have coming on board will be non-SEZ, and we are quite confident we should be able to lease up.
Right. Pavitra, how much inventory do you have in the pipeline, and when will the supply come through and reflect on your earnings? B, I did notice that your margins have declined. Cost of building material has obviously gone up. Is that a reason why your margins are slightly come off slightly from the last time we met you?
Yeah, so I assume you're talking about the real estate segment.
Yes, I am.
So there we do have upcoming launches of around 10.8 million square feet over the next 4 quarters is how we look at it on a rolling 4-quarter basis. The margins that we did see is because of the revenue recognition under Ind AS. So one of the projects that got recognized this quarter or in Q3 basically had a slightly lower margin. That's also because that particular project has a mix of both residential, office and retail in the same building. So there is a higher cost associated with that project. So far, the only revenue we've seen is from the sales of the residential units. So as the office and retail units get sold or as they get leased up, we should see that margin increase. So that was just a temporary effect for this quarter due to the revenue recognition rules. But in general, I feel margins should improve given the, yes, while cost of of construction has increased. On the residential side, we've been able to increase pricing as well. And we've seen that, like this quarter, our average price realization is almost touching 9,000 rupees a foot, which is a great improvement. Again, it's reflective of the kind of inventory we've moved in the last quarter. So depending on the kind of launches that we have each quarter, the average price realization will go up substantially or will, increase at a regular pace.
Pavitra, we're very short of time, but one quick question on hospitality. And I did hear you a few months ago where you said you're actually very bullish on that space. And the country is also very excited about hospitality. We heard stuff in the budget too. What do you have in terms of expansion plans there? Anything coming online? Anything coming on track? And also, how would you look to, fund these expansion plans?
Yeah, so we currently have a portfolio of around just under 1,500 keys across these 8 hotels in South Indian markets and GIFT City. We're looking to add another 1,000 keys, again, in the same markets of Bangalore, Chennai, and Hyderabad. We're very excited about these projects. We firmly believe in the growth story for the hotel portfolio. We are looking at funding this growth internally, but are also open to options right now in terms of looking for a like-minded partner or any other options that are on the table in terms of funding this growth. So I think Brigade has always been very focused on the hospitality portfolio. The returns are showing, are actually looking good this quarter. So I think going forward as well, we feel this is the right time to invest into the hospitality portfolio, and we will do it on our own, or if we find the right option to get funding, we will do that.
Exciting times ahead. Pavitra, we'd have loved to talk to you longer, but we're completely out of time. Hopefully, we'll catch you soon. With that, it's a wrap on this edition of India Market Open. On the other side, Sridharam Sivaram, Investment Director, Inam Holdings, joins us on Talking Point.